My name is Geoff Green, president of Green Team Realty. Thank you for joining us for the February 2020 housing market update. We're going to touch on a lot of things, including how the coronavirus is going to maybe impact the real estate world. We're also going to take a look at the election in the U.S. and some local stats. So here we go. Let's jump right in. I've got a lot of interesting information to present this month. All right, so kind of the same old story, really, as far as the housing market update goes. You know, you've been hearing from us about the inventory problem that we've had for some time. But let's talk about first projections of recession. Now, this is a this is a great chart. I rarely do you see a chart which shows you what the predictions were in the past and whether or not they were right. And you can see that the majority of economists were dead wrong. 67% of economists, thought that by 2020, the end of 2020, there would be a recession. That was back in 2018. So 2 years ago, almost over two-thirds of economists thought that by the end of 2020, there would be a recession. As early as October of 2019, still 1 out of 3 thought that there would be a recession by the end of 2020. And look where we are now, 14.3%. The economy just continues to chug along, and it's really outpacing the expectations of many people who are watching a lot of different analytics closely. Those stats come from the Wall Street Journal survey of economists. So pretty good information there. You know, the housing market, it ended 2019 red hot, no question about that. But again, shrinking supply and rising prices could cool off the rally. That's kind of the overall sentiment. Prices are continuing to rise. Inventory is still low. Builders are really, although they are optimistic, like it says here, they broke the most ground since 2006. They're still not really meeting demand. A lot of things go into that. You know, we have a panelist here today, Dave Willner, who's from the home inspection arena. We'll talk a little bit more about, you know, his take on why more new construction housing starts aren't happening. I have my own thoughts there. Let's keep jumping ahead here. Existing home sales increasing, you know, yes, things are continuing to increase year over year in every region of the states. We also saw increases in new home construction, 19 versus 18 and 17. You can see these dark blue lines. This all represents 19. So everything was increasing, right, throughout 2019. And it's really expected to continue inside of 2020. But again, the level of inventory is a real problem. You know, it's the lowest level of inventory in at least 3 decades when you're talking from the national perspective. This months of inventory of homes for sale, this is an analytic that many different organizations track, and right now the average months of inventory is at 3 months. A normal market is 6 months. A buyer's market is 9 months. A seller's market is below 6 months. 3 months is the lowest it's been in 3 decades. And there's really nothing telling us that this number is going to increase. There's a lot of, you know, reasons to think that it would continue to decrease. I guess maybe the only thing that could possibly make that happen would be new construction picking up in a big way. But it's not so easy just to bring new homes online with all of the zoning and ordinances and stuff like that. So that's interesting. Pricing is strong. You know, one thing that's interesting is back in the summer of 2018, we started to see a little bit of dip in numbers, and we were watching things closely, and we were wondering whether or not the market would rebound or whether it was going to continue on a downward trend. We definitely have seen a rebound, which is remarkable. There was a tiny little dip in the market, you know, over the last 2 years here, but it's rebounded strongly. And these are, you know, expectations of price increases in 2020 here. So you have basically every state is labeled in blue. Not any state is labeled in red. You can see red would mean that price appreciation is going to decrease, not increase. But you don't see any of that around the country. In fact, you only see 2 light blues, which is under the 2.9% mark. So CoreLogic, which is a huge data provider to the real estate industry, a lot of other organizations are forecasting stronger price appreciation. Overall economy, this is, just some, I guess, projections on kind of where things are going to go as the economy as a whole. And, this is key here. The expansion still has more room to run. It's slowing a bit with age, but it's not showing any signs of a recession. Okay. Growth of around 2.1%. It's a pretty strong rate. Steady unemployment rate. We're at one of the lowest rates we've seen in decades as far as jobs go. Relatively low inflation, which I think this has been a real surprise to a lot of people. I mean, I've, been talking to a lot of economic guys for a long, long time now, for almost a decade, and they were convinced that inflation at some point would set in, certainly by now, and it hasn't. And jobs continue to grow. So, this is really quite an economic recovery that's happening here in the U.S., and it doesn't seem like anything is, well poised enough to be able to stop. I'm going to talk a little bit about some of the things that I think maybe could lead to that, but I don't think anything's strong enough to really put it down. So let's talk real quick about the local stats here in Orange County, New York. We're looking at 2020 just for the month of January. We're in February now, so we just have the numbers from January. So it's a dot you'll see on each of these, but this is a good sign. Units sold is starting out at the highest level in the last 5 years in Orange County. That's good. Average sale price way up. Look at that. You can see back in 2019, that's the red line here, it was kind of a mixed bag, right? It was pretty much up the whole year except for a couple of months. So all in all, net, it's price increase. But this is a remarkable jump here. So it's going to be interesting to see how that plays out this year in 2020. Days on market, that means how fast things are selling. The lower, the stronger the seller's market it is, right? We've seen a downward trend year over year, 16, 17, 18, 19, 20. This is 16, 17, 18, 19, and 20 is green matched at the level of 2019, which is a very low mark. I mean, it's, that's a very strong days on market number. Going down south of the border into Jersey, taking a look at Sussex County, the units sold, you can't really see the green square, but it is doubled over the blue line there, which was 2017. So, not starting out at the highest level in the last 5 years, but still a pretty high level for where we're at in Sussex County. Average price is up overall the last 5 years, so that's a good sign there for Sussex County as far as people looking to sell homes. Asked to sold ratio, this is the last asking price versus where properties are selling. Again, it's higher. That means that sellers, essentially what this means, call it 98%. So sellers on average are only having to negotiate 2% off the asking price, right? So that's pretty strong. That means that buyers don't really have a lot of leverage in this market that we're in. And again, days on market, the lowest level in 5 years in Sussex County, which means that things are moving quick. All right, so just some housekeeping here before we get into it. Now, Melissa, our producer, I've noticed, Melissa, that it's going to be St. Patty's Day next month. So we're going to have some green beer on tap for all the panelists. So we got to make sure of that one. So don't forget, March 17th, St. Patty's Day at 2 p.m. We're going to do the next one. You can always stay in touch with us by getting to greenteamrealty.com/HMU. And thank you to our sponsor, Really, the real estate referral community. For any professional who's involved in the real estate industry, you can connect, communicate, and securely exchange referrals with SpeedNews. Join at reallyhq.com. Okay, so lots to talk about here. Dave is our panelist who joined me this month. I just want to throw a couple more things out there as it relates to those stats. Dave, you can go ahead and unmute your mic and feel free to jump in whenever you want. We're still waiting on, actually, let me jump right back in here, share my screen one more time. I wanted to take a look at, can't get out of here we go. The National Association of Home Builders is coming out with some numbers today that doesn't look like they've come out yet, because we're still seeing January here. But I just wanted to show everybody who watches, this is some good stuff. You could just Google National Association of Home Builders. This is their website. Right here on their homepage, you can basically get to these analytics, and you can see that the confidence index, that's what this is. You can see it's as high as it's been since 2008, right? It's a 12-year run here that you see, and back there it was really low, but it's steadily going up, 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 and up, and up. And here you can see, right, in January, 2018, in the summer, remember I talked about that dip. There was a dip in confidence in the home builders, but look, it's coming right back up, and it's at its highest level in over 12 years. So that's interesting. You can take a look at housing starts too, the data loads for that as well. Highest amount of housing starts in 6 years, it looks like. This goes back to 14, and then framing the lumber price, you can check that out. So there's, just some good information that pertains here. So Dave, before I get into my, you're a pretty smart guy. You're a good businessman. Dave is a home inspector with Pillar to Post, and he has thankfully joined me today. Otherwise, I'd be sitting here talking to myself. But Dave's a good businessman. He's pretty hip to what's going on out there. Do you see anything stopping this housing market inside of 2020 in terms of slowing it down?
No, I think 2020 is going to be a big year. I know January started off with a real bang, at least for us. We reported our highest earnings in 3 years this January. Number of inspections are up. We see definitely, though, that there's a niche in the under $500,000 mark. So the higher end homes not moving as quickly as the under $500,000 homes.
Yeah, at least in our area, right? I mean, if you're down in Manhattan or you're on the West Coast, something like that, 500,000 is not going to get you a fixer-upper.
Right. I think it's a respective number that, if it should be considering the market, absolutely. I mean, $500,000 in some markets isn't what it is here.
Right, right.
Absolutely.
Sure. Yeah, I would agree. I don't think there's anything stopping this 2020 from having a big year. I do think, however, there are some interesting things economically, macro scale, happening that everybody should be aware of. And I think that, everybody's been hearing a lot about this coronavirus, and I just wanted to give some perspective on that. First, to kind of educate people a little bit, because I don't think everybody realizes, well, how does a virus really, on the granular level, how does it impact economics, right? And I've been learning, right? Because I don't think every day about how health problems are going to impact economies, but it's just been fascinating to me. And I've watched what's been going on with the coronavirus, and then I just wanted to share what I have. So the first thing is travel. There's two things, the coronavirus being the first, but there's another thing happening out there with the Boeing 737 MAX, which was grounded last year. That has had a major impact on the airline industry, which has also had an impact on overall travel spending. So right now, there's kind of like a double whammy happening within the travel industry. So we have to be mindful of that. And also to note that, travel is a pretty significant segment of the U.S. economy. It's not to be, dismissed. It's a big deal, especially, like, for example, a micro example would be Corning up in upstate New York. They get, a lot of their revenue comes from people traveling from New York City up to Niagara Falls, and it's kind of like a midway point. So a lot of foreign travelers will go to their plant and see how they make glass and all these other things, right? And they actually have tours in Mandarin, because so many Chinese are being bused from New York up to Niagara Falls and back again. And so they're really hurting right now because of the coronavirus and everything that's happening. But also these airline industries have been impacted by the Boeing 737 MAX, which, if you follow that story, they just released again another delay, and it's software related. In fact, that's what's going on, is that they just can't figure out where the glitches are with this plane. And so many of these airlines invested in these planes, and they were banking on them to be able to have all these different routes, and they're not able to have them. So travel is something that should be considered, and especially, real estate is such a local thing that, there could be a really impacted market locally while the nation is booming. So those who are, in those travel type of, economies, watch out. You should be aware of those two things. The other
Jeff,
thing, go ahead.
do you think that, considering the coronavirus and the impact of the Boeing Supermax, do you think that the demand for vacation housing in both Orange and Sullivan County will be affected? I mean, do you think more people will be, or for commercial opportunities and potential summer retreats?
I don't think so, because I don't think that necessarily has to do with people traveling from abroad to stay for short runs. I think that second homes are things that people in the New York City metro area buy to get away from the city for a weekend. So I don't necessarily see that, the coronavirus necessarily impacting that end of the travel spectrum. I think it's more of a short-term, traveler type of impact. And I think that's, in bigger marketplaces. But again, the Chinese are abundant in headcount and also have a lot of money that they spend. So it's not to be dismissed. That's all I'm saying. It's an interesting, dynamic to keep an eye on. Now, another angle of the coronavirus is people being quarantined, right? China is literally quarantining cities with millions of people in them, not allowing them to leave. They've shut down train lines and bus routes and this whole thing. And they have people like the Gestapo walking around to see if people are sneezing. I mean, it's a crazy situation. And the World Health Organization, by and large, is commending them for what they're doing to try to stop this coronavirus from spreading. But it's kind of a creepy situation, right? But what else are they going to do? So a lot's going to be learned from this as to how they should. But think about what a quarantine means, right? People can't leave their city. They can't travel. Yeah, but a lot of them can't go to work. They're shutting down stores. Factories are not able to operate. So now you're starting to see some headlines about Apple revising its earnings, right? Because they're saying that the supply chain is being affected by the coronavirus because a lot of their manufacturing is happening in China. And not only is the demand for iPhones and their products being impacted because of the virus in China and the economy in China kind of stopping, but the supply chain is being impacted as well in terms of being able to produce. But then the supply chain, it goes even further, right? You have to start to think about commodities, right? Because if the factories aren't running, they don't need iron ore. They don't need the heavy, metals to build and do these things. So the commodity prices are dropping. Watch the price of oil. It's down right now. So there's a lot of things globally that are happening right now that, are being overlooked, I think, by a lot of people because things are so good in the United States right now. But again, globally, a lot of economies haven't been doing so well for the last few years. So it'll be interesting to see what happens, how things play out with the coronavirus. Hopefully, we see it peak and start to dissipate, but it's already killed more people than the SARS virus, which happened 20 some odd years ago. The other factor, of course, is we're in a presidential election year. It'll be interesting to see what happens there. I mean, you definitely have some Democratic candidates who are at the opposite spectrum in terms of economic policy than the Trump administration is. And if they get elected, how is that going to impact things? I mean, that's probably not going to impact 2020 at all, right? Because the election doesn't happen until November. But needless to say, it's an issue that shouldn't be dismissed. It's going to be interesting to see how all this stuff plays out and where things are happening. The other thing that, has kind of simmered down because some of agreements have been put in place is the trade agreements that have been happening, both with Canada and Mexico in terms of the NAFTA treaty, and also with China in these little trade wars, not little, but serious trade wars that have been going on over the last 18 months with the US. So there are a lot of factors out there. Some of them are global. Many of them are global, and it'll just be interesting to see how these things play out. So Keren, welcome. I see you have joined us a little bit late. I know you had a closing. You were making money for Green Team, so you are forgiven. That's a really good thing. I can't.
Thanks,
there you
Geoff.
go. Welcome to the party. Thanks for being here.
Of course.
So just to bring you up to speed, you might have seen the stats and whatnot that we emailed around earlier today that we discussed here previously. Dave's thinking, I'm thinking that 2020 is going to be a big year. Nothing's really stopping this. We're still seeing a lot of inventory pressure, problems with inventory. What are you seeing?
I'm actually seeing the same thing, and I have to say that spring market has started already. I'm busy these days the way that I should be, like at the end of April.
Right.
So this month alone, I have 3 closings. Next month, I have another 5 closings. So I'm a very happy camper. And
Good.
for it to start in February is just unbelievable.
Yeah. Well, it's also been a very mild winter for us, and that helps. It's funny how much of a fair weather business real estate really is. People like they just don't want to go out and look at homes when it's raining or it's cold, it's snowing, those sorts of things. So it's been cold at stints in the Northeast here, at least in our area, but there hasn't been a lot of precipitation during the cold times. So we haven't had a lot of snow to deal with. So that's really helped catapult things here in the beginning of the year. And now, we're nearing the end of February. I'm sure we're going to get blasted with some snow, but needless to say, it definitely has started for a good start. The one thing, I was talking with somebody just the other day about who's thinking about getting back into the home ownership game. They fell in hard economic times a bunch of years ago, got caught up in the downturn with the profession that they're in, and have been working hard to get things going again. And now they're back in it trying to buy. And of course, the market's super high. And it's like, the best deals are behind them. But the one thing that, is important for somebody who's in that state, right? Because there's maybe some people that are listening to this or people know other people, interest rates are really low. And that's something that should be considered, because yes, prices are high, but rates are really low. So it still can fit the monthly budget, right? And I think that's the key, is that when people are thinking about buying right now, they have to consider how low rates are, and they can lock that rate in for a 15, 20, or 30-year mortgage, and ultimately set themselves up for success over that time and be able to get into the homeownership path, which is really where we want everybody to be. So, Dave, Keren, on this idea of anything that you see stopping this market from churning as fast as we think it's going to in 2020, you guys have anything else to add?
It's about managing the inventory out there that's there. I mean, it is definitely a limited inventory market. The good, as you said, the good deals, they've been had, but I think that there's still a strong influx of people coming up from the city, coming up to our rural communities, more rural communities up here. That's where the buyers are. So that's what I see. I mean, my clients are people coming up from the city looking to start families up here, looking for that single family home, get out of rentership. Nothing at all. I don't see anything that's going to hold that back. As long as interest rates stay low, it's people are going to continue to buy.
Yeah, the Fed, it looks like, is just they're in a holding pattern. They're not necessarily going to raise or lower the overnight federal funds rate that they can use to manipulate the economy. It's interesting over the last 10 to 15 years how that lever that they had, which once meant so much, doesn't seem to mean that much anymore. But needless to say, it seems like the Fed is going to hold in place. And again, just more information to consider. All right. Well, Keren, do you have anything else you want to add? Otherwise, we're going to wrap this baby up.
Actually, the only thing I do want to add is just to continue on the point that you were making. There are plenty of people out there that are renting, even in Sussex County, in our area, that could actually afford to be homeowners and would pay less in a mortgage than they do for rent right now. So that's something important to remember. If you have a mortgage broker you're working with or someone you'd like to know, I can certainly forward information. But the thing is that a lot of renters don't know that they can afford to to be homeowners. And that's why they should get in touch with a mortgage broker just to see what their options are. Because in our area, you can pay $800 in a mortgage payment as opposed to the $1,200 you're paying in rent. And people are just not educated enough to know
Yeah.
these things.
Yeah, that's a really good point, Karen. It's so important, right? Especially people that got caught up in the downturn, 10, 12 years ago. Don't be afraid, research, right? It's not going to cost you anything to research, to talk to a mortgage professional, to see whether or not you can get in the game if your income and credit and everything is where it needs to be. And get in the game, because home ownership is a no-brainer. It really is. There's really few downsides to it. It helps you build wealth over the course of time. And, the other thing that I've seen go on is these banks who have been renting out their inventory now suddenly are starting to sell it, and it's displacing a lot of people who are renting those homes, and now they can't find rentals when they're in a bad spot. And don't ever forget that when you're renting, you're really at the mercy of your landlord, so it's in your best interest to own for a lot of different reasons. So, all right,
Absolutely.
great
Hey,
stuff. Thank you,
Jeff,
panel, for
one more
joining
thing
me.
I want to, could I
Go ahead, Dave.
something? One thing I've seen with some of my clients is that there's been more of a trend for FHA loans out there as well. So particularly for those renters, FHA is a great option where they are no money down essentially.
Right. Yeah, good point. No, there are tons of options, tons of very good options. And I guess the one last thing I'll say is that another great thing about this recovery, this economic recovery that we're in, is you're not seeing very much subprime lending happening, which is excellent. That means that this recovery is true. It's really happening with people buying homes that have the ability to buy them, that have skin in the game, that are vested in the process and are going to be there for a long time. So this is a much better recovery to what we saw back in the early 2000s, which was primarily exploding because of subprime lending. So yet another good indicator to say that, maybe we are going to have a really good run here in the US. So anyway, everybody, thanks for joining us. Panelists, before we close it out, Dave Willner, pillar to post, home inspector. How does somebody get a hold of you if they want their home inspected?
Call me at 732-647-5231 or email me at dave.willner, WILLNER, at pillar to post.
All right, awesome. Karen, how about you? How would one get a hold of you?
They can always reach out to me via cell phone or text message. I am attached to my phone. That number is 551-262-4062.
All right, great. And I just want to leave everybody off on this note. Once again, we're going to be drinking green beer next month on St. Patty's Day at 2 p.m. Please join us for the next housing market update. Thanks for everybody for being here. Take care. Have a good one.
Thanks, Jess. Bye, everyone.